Welcome back to the stage, Robert and Anas. That's fair. Wherever you'd like. So I think if I had put the two presentations through ChatGPT, they would say bullish on gas, fair, concerned about oil.
Bullish on gas volume. Bullish on gas volumes.
Okay. So say why.
Well, all those things that I mentioned, right? We've got increased consumption in the U.S. We've got increased power burn, in particular in the power sector. Pipelines are critical infrastructure. They can't be duplicated. And we have this massive growth in LNG exports. So what we have seen historically, massive increase in production, massive increase in exports. And these companies are paying good dividends. So, that to me is a pretty, again, I don't do complicated. I just want a simple story.
You talked about Energy Transfer. Any other company that you would target in on in light of what you said about volumes?
Well, my nephew works at Williams, so I have to say Williams. I'm from Tulsa, so I'm required to mention Williams. But also just a quick bit of historical analysis here. My first book was on Enron. In 2002, Pipe Dreams, Greed, Ego, and the Death of Enron. Rich Kinder left Enron because Ken Lay reneged on a deal to make him CEO. Kinder went out on his own, bought a single pipeline, I think it was in Kansas, for about $30 million from Enron. He's now one of the richest people in America, and that company is Kinder Morgan. So his business model and Kinder Morgan have been very successful over time. They, by the way, I'll just end with this. They switched from an MLP model to a C Corp. I don't know, what was that, maybe 8 years ago, something like that. So just an interesting kind of decision in terms from a business structure standpoint about how some of the pipeliners see the market and what business structure they want to use. Yeah. Because the MLP has been one of the main vehicles pipeliners have used.
NGP was involved in that, right?
Oh, they were. Yeah. Natural Gas Partners, yeah.
My former employer.
Yeah.
So gas is one side of the equation, oil being the other. You posted on X, and feel free to plug your X account like you did at the end. That was good. Robert, Bryce.
On Twitter, Power Hungry, PWR okay. Hungry. Okay, yeah.
One of the reasons we're obviously bullish on natural gas too. We accommodated for it in our fund at the end of last year, but you posted a few days ago on X, you're concerned about the price for Brent. You think it's at the bottom unless, what did you say, we hit a recession? I even hesitate to say the word. Do you want to expound?
If you don't mind, I would like just to explain a few points on
Please.
This. About 3 days ago, or let me retract here. We have OPEC, the Organization of Oil or Petroleum Exporting Countries, 12 members. And then we have OPEC Plus. OPEC Plus is OPEC plus 10 members, including Russia. So the total is 22. Out of those 22, we have 8 members that went for voluntary cuts twice. 1.6 the first time and 2.2 million barrels a day the second time. They wanted to unwind this for over a year. And finally, they decided to unwind this starting the 1st of April, over 18 months period. So this is scattered throughout the 18 months. So they are not going to bring the 2.2 at once. 3 days ago, they met, and they decided to increase the increments in May alone by 3 times. And people were shocked, and they said, well, this lowered, this is why oil price is declining. We lost about 14, 15% of oil prices in 2 days. But there were major changes, and the story by Bloomberg and others basically are completely off. And even the oil analysts, especially on X and others, they missed the whole point. First of all, they reverted to monthly meetings. This is very important, which means that they are flexible right now. They might stop the additions, they might cut again, etc. So they are going to meet every month simply because of the Trump tariffs and the possible impact. That's where the word recession came from, that we will be range bound unless we have a recession. With a recession, we are going to see a decline in oil demand based on our view, if we have no recession, the average increase in 2025 in global oil demand is 1.17 million barrels a day. This is way lower than OPEC, by the way. If we end up with a recession, global recession, we are going to lose all of that. We are going to lose all of that, and then we are going to have about 300,000 barrels a day of decline year over year.
And what effect on price?
As a result of that, prices will decline to the 50s, but then because OPEC Plus is meeting on the 8 members are meeting on monthly basis, we expect them to start cutting. But let me clarify where Bloomberg and others went wrong on the meeting. They decided to add 411,000 barrels a day in May alone, just 1 month. The media is telling us they are trying to punish Kazakhstan and Iraq because they were overproducing. That does not make any sense for the following reasons. Russian police were already at the CPC terminal and they blocked most of the Kazakh exports. So there is no reason basically to punish Kazakhstan by lowering prices while the Russian police basically are blocking their exports. So that's the first fact. The second one is demand from India and China increased substantially in May. Why? Because we lost 2/3 of Venezuelan exports. And they needed a replacement. Companies basically were rushing to Saudi Arabia, Kuwait, and Iraq, and others trying to replace the Venezuelan oil. At the same time, we have some companies that panicked over sanctions on Iran. I do not believe that sanctions on Iran will work for various reasons, but they were panicking anyway. So when they said that there was an increase in demand in May, that's true. But they knew that could be temporary, and that's why they want to meet the following month. So the idea that they did this to punish Kazakhstan is incorrect. The final one is they said because Trump wanted lower prices and they are trying to please Trump or try to avoid tariffs. Well, that's not the case. But even if you take the political angle of it, Trump's first visit overseas is going to be Saudi Arabia. Trump is going to meet with Putin in Riyadh. You know what Trump did to Zelensky in the White House? If you were Putin, how much do you pay for that? I'm serious. How much do you pay for that? If you want to change all Biden policies in the Middle East and you are Saudi Arabia, how much will you pay for that? How much will you pay for Trump's visit to visit your country?
So let's do this. You've both talked about tariffs a little bit this morning. And so 48 hours in now, give me the hottest take that you can. Are they real? Are they here to stay? Or is it a negotiating tactic?
I have no idea. I mean, truly. I mean, who understands Trump? I mean, raise your hand. Go ahead. Yeah, I don't see any hands going up. If I could, Tim, just shift because just the caption here led me to think about traditional transitional profit opportunities, and Mr. Honig talked about commodities. I'm fascinated by the copper market. I don't understand it. I was in Charlotte on Thursday speaking to a group of companies that recycle electrical equipment, and some of they're buyers of copper, and they're saying we don't see any change in the copper price. And another guy who was dealing with copper scrap said we're getting worse returns on our copper. So, but nevertheless, what's interesting, the COPX, the ETF for copper, was down 10% yesterday. The uranium ETF, URA, was down 7%. U.S. steel down less than 2%. So one of the things that I think is interesting in terms of the commodity space is what now happens to the steel industry in the United States. Again, I'm not giving you any predictions here. U.S. Steel went from a PE of 1 to now I think they're trading at a PE of 18 or 20. And now they're a takeover target for Nippon Steel. But a lot of this energy transition opportunity, or rather grid expansion opportunity, is going to be in specialty steels. Amorphous steel, nose, goes, et cetera. My other quick points, I would avoid, if we're talking about profit, I'd avoid the drillers and the frackers in terms of equities. That's just my view because the industry is getting so much more efficient at drilling and fracking, and I wouldn't short ExxonMobil.
Yeah, what about producers?
Well, ExxonMobil's a producer, but they're integrated, and they've just shown over time how successful they can be. You know, the upstream, I mean, I would defer to Anas on, you know, what the profitability of domestic independent upstream companies would be. They traditionally, you know, that's where, in the oil industry, that's where the money has always been made. Cyclically, it goes into refining, but, you know, upstream, midstream, downstream, I'm more bullish on midstream than the others.
Any thoughts on that?
A couple of things. If you go back into and read the history of the oil industry for the last 140 years, we have to separate the international market from the US market. Why did ExxonMobil buy Pioneer? Why Chevron basically entered the Permian in a big way? What is the interest of those companies in shale? We've done analysis on this historically, and we found out that there is no financial benefits to both of them from being in shale. But if you know the history of the oil industry, you know exactly why they've done it. I've done work on hydrogen and green hydrogen in 1998. And I thought I was going to make, as a professor at Colorado School of Mines, I was going to make some money, some grants out of it. And the conclusion was exactly the opposite of what I thought. The conclusion was the oil companies are going to buy all the hydrogen, green hydrogen companies, all of them, and they are going to switch the technology. And that's exactly what happened. It is after control. They've done it before. What Texas Railroad Commission did, what the Oklahoma Commission did, they did it to help the Seven Sisters historically overseas. It's exactly what bothers the international oil industry are the US exports from independence. And if you look at the history of the big companies, they were always, always, always against the independence. They fought them at the legal level, federal level, state level, everywhere. And the control, this is about control, this is not about money. And this is another reason I did not mention today when I mentioned why Trump cannot deliver. Simply because the drill baby drill came in from the small independents, and the medium-sized companies did not come from the majors. But here I would like to switch, if you don't mind, just to go back to gas, and I would like to raise a very important issue. Russia produces a crude called Urals. Because of the sanctions, they cannot sell it to Europe anymore. So they want to sell it to Asia. So it goes through the Baltic, goes through Scandinavia, all the way around Europe, to the Mediterranean, through the Suez Canal, through the Red Sea, the Houthis, all the way to Asia. They have no problems at all. But Russia cannot send a single LNG tanker. All the Russian tankers have to go around Africa. Russia has no problems with the Houthis. Why they cannot send LNG tankers through the Red Sea? Qatar has no problems with the Houthis. Yet, they have to send all their LNG to Europe around Africa, and they cannot send it through the Red Sea. Whoever controls the Red Sea controls the trade of India, China, the Middle East, Russia, and Europe, and it's not the Houthis.
Let's look, going back to your point about these transitional opportunities, let's go back more domestic. We sit right here, a few minutes from one of Meta's largest data centers, right up the street in Westlake. You talked 43% of natural gas is going to power those types of operations. You posted earlier this week, let me quote you, "The surge in U.S. electricity demand for AI and other uses is fueling a boom in power transmission and delivery equipment." And one supplier told you during a down economy, business is good, and during an up economy, business is great. So it seems like you're looking for these opportunities where we're transmitting some of that power, where there's companies.
Well, and this is key, and that was a supplier in Charlotte. I spoke to the Professional Electrical Apparatus Reconditioning League.
That exists,
an association I didn't know about, Pearl. But it's mostly small manufacturers that recondition and refurbish used transformers, breakers, switchgear, et cetera. And he made that very point, you know, that in a down economy, they're still doing well. Now they're in an upswing and they're doing even better. So one company called Piedmont, their Piedmont Bushings and Infrastructure, they have an order book that went from 100 of these specialty bushings to 250. Look at one of the other notes I made. Look at GE Vernova, spun off from General Electric. That's their power sector business. They're selling at a multiple now of 49. The PE is 49. They have a backlog for their large F-class turbines of 4 years. So these companies, Hitachi Energy, they're dramatically expanding their investment in transformers. So high-power transformers, switchgears, breakers. The companies that supply that equipment and the large turbines, they're doing a lot of money. They're doing a lot of business, and I don't see that changing because of this over the next few years because of this rapid build out of AI. So these suppliers into the electric grid, I think they're obviously going to make a lot of money, and it's going to be a lot of them are going to be the smaller companies, but a lot of them are going to be publicly traded that you can find. And GE Vernova, GEV is one of them.
Your thoughts?
They also make wind turbines, by the way, and I don't like the wind business, but I'll let them go on that.
A couple of comments on this, just to build on what Robert said. Energy demand is increasing and going through the roof. There are several reasons for that. One of them is the AI. The other one is urbanization. It's not, the growth in population has little impact. It's really the urbanization that has the demand or the increase in demand. And migration. Think about it this way. When President Biden brought in those tens of thousands of families from Afghanistan, the moment they put them in an apartment in the United States, even without jobs, their energy demand increased by about 70-fold. Those immigrants who are coming to the United States from South America, the moment they settle in an apartment, their energy consumption increases by about 30-fold. So immigration basically plays a role in this one. So you have AI, you have urbanization, you have immigration, and then you have the failure of the green policies. And that adds all of it to the increase in gas demand.
Yeah,
what the implication of this is, because of the increase in energy demand, that means the old plan of using solar and wind to replace coal and gas is not going to materialize.
Yeah.
And therefore, the demand for coal and gas is going to be way higher than all forecasts. And we got to be very careful with what the media and several analysts are telling us about Europe in particular. They are saying that, look, solar and wind basically are reducing gas demand in Europe. Be careful with that. Here is why. If you have a recession or low economic growth, the sun does not care. Wind does not care. Whether you have a recession or not, the sun is going to shine, wind is going to blow. So when you have a recession and energy demand decreases, and the sun is going to shine, wind is going to blow, and you are a utility manager, what you can control? The only thing you can control is gas and coal. So the cut has to come from gas and coal because of the recession, not because of the increasing capacity of the sun and wind.
If I can just add on that one quick point, I see we're getting this time's up signal, but I think it's the differentiation between electricity and the energy markets, oil and gas and coal, and electricity. And what I was at CERAWeek last month, and it was a very interesting point from the head of the CEO of Hitachi Energy. They're investing billions to 1.7 billion to increase their transformer production capacity. And I asked him, from where is the demand coming? And he said it's coming from all over the world. So from Asia, Europe, and the US. He said a third, a third, a third. So this global electricity demand continues apace. So that would be my closing thought with you, is that yes, energy demand is growing, but the demand for electricity is the key driver globally because of the points that Anas just made.
I think
Great.
that's it.
Thank you.
All right.
Thanks, everybody. We appreciate it.